Friday, and you're watching FreightWaves Now. I'm your host, Anthony Smith, and coming up, we're going to have Andrew Cox here with us with a DHL Supply Chain Pricing Power Index update. But first, we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hello everyone and welcome to your Friday carrier update presented by PowerFleet. I'm Zach Strickland. Looking at our outbound tender rejection index seasonality chart to check out how we compare year over year the last couple of yees. Of course, 2020 is not, it's on an island in terms of comparisons, but to see if we're actually starting to return to any seasonality, any normalcy whatsoever, not really. It looks like we do have a little bit of parallels between 2018 and 2020, but that's really a short-term event. October, again, does have a little bit of a calming, influence in the market as we exit a third quarter, starting the fourth quarter effect. Again, tender rejection rates right around 25%. We did take a pretty big dive this week on the outbound tender rejection rate, but that is from an all-time high almost of around 27%, right under 27% outbound tender rejection rates, topping the Labor Day peak, if you will, right around in the early September month. But looking at moving forward, it looks like we do tend to have some stabilization throughout October, and then starting in November, early to mid-November, we should start to see that tender rejection rate start to rise back again. Now, how far this thing falls before then is a pretty big mystery, but it's probably not going to fall terribly far considering just how high this tender rejection rate is. And again, the pace of decline is not that strong at this point in time. So again, looking at the seasonality, we're not really there yet in terms of returning to any normalcy. A lot of questions still remain in the market. Looking at van versus reefer, both van and reefer rejection rates on the decline. Van falling slowly, reefer falling a little bit stronger, but again, reefer's a little bit more volatile, a little less volume in the market overall, but it's still very high at a 43% rejection rate right now. So reefer activity still very strong. A lot of those reefer contracts are not getting upheld right now as they can make a lot more money on the spot market. And again, that demand has grown beyond what we saw last year by a good bit so far. 24% on the van rejection rate. Again, it's just kind of slowly declining. Nothing to show us that the market is shifting significantly at this point. It's just one of those correctionary periods, as people like to call it in the financial sector, where we do kind of settle in for a minute before something shifts significantly. Looking at where in the country our tender rejection rates are having their biggest increases, decreases, you can see there is a lot more dark red on here. And some of the larger markets of the United States. We've got Harrisburg, Allentown, Columbus, and Cleveland, of all places, really showing a lot of significant declines in tender rejection rates combined with volume, as well as Ontario and Los Angeles still showing some deepening loss here in overall tender rejection rate. So these markets are cooling, but they're still relatively active in terms of tender rejection rates, which I'll dive into here in a minute. But again, throughout most of the country, it's relatively stable. A lot of white on this map right here, indicating that there's just not a lot of change in the overall direction of the market throughout a lot of the middle section of the country. Here's Columbus and Cleveland, the Ohio market, the two largest Ohio markets, showing you the tender rejection decline here over the last couple of days. We've got Cleveland and Columbus both dropping throughout the week, but again, still extremely elevated, historically speaking, 19% or just under 20% in Cleveland, and right around 26.5% in Columbus, which again, Mike Vincent talked about yesterday, a very active freight market in general. So the outbound tender rejection index for the whole country, looking at a lot of these markets, 65% of them above 25%, and a lot of them are in that smaller market environment. So St. Cloud, Omaha, New Orleans, Rock Island, Illinois, Rapid City, South Dakota, Kansas City, Missouri, not necessarily a tiny market, but again, not one of those major markets that we traditionally talk about in terms of being, real market drivers. So carriers are really flocking to a lot of these large markets to get a lot of this capacity coverage going, and abandoning some of these smaller markets that are still being neglected on the spot market side. That's why we see a lot of these rejection rates in some of these smaller markets right now. So again, if you're looking to get some spot freight, some of these smaller markets may be a better solution. And that'll do it for today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
And welcome to the DHL Supply Chain Pricing Power Index Update. I'm here with Andrew Cox. Andrew, what's the latest?
Anthony, this week the carriers lost the most marginal of grounds. I mean, just a bit here. And we're going to take a look at volumes, rejections, and spot rates, and then a little bit at that Bank of America data that we look at pretty regularly. But you'll see the same theme here in the first three: volumes, rejections, and rates. It's all just kind of stagnant right now. It's a little bit of a seasonal breather, I think, before we get into the holiday season, which we know is going to be elongated. We saw Amazon and Walmart and Target all trying to kind of smooth out the disruptions throughout the entire holiday season, whether it's Amazon Prime Day, 75 days before Christmas. In any case, they're trying to spread it out, and I think they're going to do a good job of it. But right now, carriers are still in a very dominant position, but lost a little bit of ground this week.
Right, and I can't remember the last time this thing was under 70. It seems like 80 and up has been the trend lately, and even coming down to 80 seems like a little bit of a retreat, but still very high overall. What's the latest with volumes? Is that coming down and also staying relatively high?
Yeah, so I mean, we still have volumes over 15,000. That is remarkable, although it is down about 5% off the beginning of the month, and it's just been kind of a steady trickle down or slip since the comeback after Labor Day. Again, as Zach just mentioned, September is typically a little bit of a seasonal breather. We're seeing that. We're actually seeing a little bit of seasonality here, but again, volumes are still really high, and I think it's actually this kind of come down here is not a matter of a lack of demand, but rather an inflection upwards in contract pricing, just allowing some of those retendered volumes to not happen so much. You're having just carriers renegotiating up and getting those contract prices a little bit higher, which is causing a little bit lower tenders.
Got you. And just as you mentioned, it's trickling down a little bit, but still, as you can see through these historical trends,
still an outlier.
An outlier overall. What does this mean for overall capacity?
Well, capacity is still extremely tight. Carriers are still rejecting 1 in 4 loads. The outbound tender rejection index has been above 25 for 6 weeks now. That is by far the longest stretch that we've ever had. The one before that was about 3 weeks back in the spring of 2018. So this is by far the longest time we've had up there. Capacity is still really tight, although carriers and shippers seem to be renegotiating some of those rates upwards, and we see contract prices finally kind of creeping up and getting closer to spot rates. Spot rates are still really high. Rejections are still really high. Capacity is really tight.
So what does this all mean for, of course, rates?
Yeah, I mean, rates are still extremely high as well. I mean, again, we have a very common theme here. Yeah. Last week was my broken record territory. We had a little bit more volatility this week than last, but again, we're still in that same mode. Rates are just a hair under $3 a mile. They've kind of been oscillating in between $2.90 and $3 a mile for the last month or so. A really good place to be if you're a carrier moving into the holiday season. Again, really tight stuff. But I every week I seemingly talk about the lack of service spending and how it's affecting the goods spending. So this is from Bank of America, and this is the share of total card spending by category. So compared to February, is compared now to February. So the big one here is the travel and airline and lodging spending. So that's the service spending that I talk about. It was once almost 5% of total card spending, now about 2%. So that enables people to spend more on goods. So you look at grocery, you look at clothing, furniture, home improvement, they all are up year over year. And it's just these slight differences, whether from 0.9 to 1.4, that's making the huge difference in volumes. That's why we're seeing volumes up, in the 15,000 right now.
That's right. I mean, you just hit the nail on the head, that equilibrium, finding that balance of less money on services, more on goods, and that means, of course, more freight volumes. Andrew, this might be a shot in the dark, but as you mentioned, we have a holiday season coming up here. Do you have any kind of an outlook for where the DHL PPI is heading?
I think the holiday season is going to be really good for both carriers and for shippers. I think we're going to have a really strong holiday season. I once thought that we needed that kind of second stimulus to have a strong holiday season, but after looking at consumer confidence and it not faltering, even though the unemployment benefits were waning, And just the fact that I've looked at that retail sales over and over again, that consumer data, it's all pretty strong moving into the holiday season. I think we're going to have a great holiday season. I think capacity is still going to be tight. I think the airline travel and the lodging is still not going to be available to most people, so they're going to be spending more on goods. I expect it to be close in the upwards in the 75, 85 range. I expect carriers to still be in dominant position starting the new year.
Excellent. And Andrew, thank you so much. Where can people find more?
Oh, you can find everything at freightwaves.com/passport. JP's team just put out their monthly reefer markets report, so go take a look at that.
Excellent. Thanks so much. We appreciate it. And thank you so much for tuning in. That's going to do it for this update for the DHL Supply Chain Pricing Power Index update. Be sure to tune in next week for all the latest. That's going to wrap it up for this Friday edition of FreightWaves Now. As always, you can check out our content on all your favorite streaming platforms, including Apple TV. Thanks so much for tuning in, and we'll see you on the next episode.